In a possible worldwide slowdown, what happens to tech stocks? Now, we know the cloud plays are doing just fine, as the cloud is part of a huge secular trend that will keep working even in a weaker economy. But what about the more basic stuff, the nuts and bolts of technology? How's that holding up? Whenever I want to read on the sector, I like to catch up with companies like Tech Data. TECD for you home gamers, a terrific company, largest wholesale distributor of technology products, services, and solutions on earth. Think of Tech Data as kind of a supermarket of technology, or as an arms dealer, especially the small and medium-sized businesses, perhaps the best pulse on information and technology spending there is. Less than 2 weeks ago, Tech Data reported a breathtaking quarter. We're talking spectacularly better than expected numbers. Excluding one-time items, the company delivered a monster 38-cent earnings beat off a $2.17 basis, much higher than expected revenue, up 11% year-over-year. And that strength was consistent worldwide. On a constant currency basis, every region was up 12 to 14%. Best of all, Tech Data gave us some incredibly bullish guidance for next quarter. That's why the stock pulled vaulted from 73 to 89 in a single session. However, there's still an enormous amount of skepticism about the tech sector, which is why the stock sells for less than 8 times earnings. So what do we make of these numbers? Let's take a close look with Rich Hume. He's the CEO of Tech Data. Learn more about how his company's doing, where it's headed. Mr. Hume, welcome to Mad Money. Great to see you, sir. Thank you, Rich. Have a seat.
For having me on the show.
Okay, earlier, well, thank you. We had Doug Merritt on from Splunk. They reported an amazing quarter. One of the many cloud companies that are doing great. You yourself have a cloud division. Don't want to get to that yet, because what I need you to tell people, in a time of very little confidence about tech spending, you have 3 regions. All 3 were much better than expected.
Yeah, Jim, what I have to tell you is I think it's been an incredible year for the tech sector. Yeah. It's been strong all year, and as you said, all 3 regions performed well. But as importantly, when we take a look at the product segments, all of the big product segments had quite good growth. So we see strength across the board in 2018.
Now, I want people to understand that you're looking at your data. I mean, at one point you said in your comms call, if anyone even knew that we could do this level versus what we thought a year ago, we'd be jumping up and down. I think that there's some sort of shroud, some gloom, and I don't get it versus the percentages that you have Europe, Asia, the Americas.
Yeah, I think that, again, it's strong all over. And if you take a look at the guidance that we've provided for the coming quarter, the midpoint of our guidance is 7% growth. So we would anticipate that the strength will continue, at least as we look over the next 90 days.
All right, and your worldwide partners, you've 3 of your vendors you talk about, 10% or more of your net sales, Apple 17, HP 11, Cisco 10. You're a good representation there of things.
All very good representation. And then the list goes on. We have the best names in tech, and we've got great relationships with them, and we've got a great customer base that we are able to deliver all that technology to.
You're putting your money where your mouth is. You made a big acquisition, but now you're starting to reap the benefits, cash flow gains, and you're putting it right to work.
Yeah, we've always been a company that generated really strong cash flow. And actually, we had acquired and finalized that acquisition maybe 20 months ago.
Right.
We paid down the debt well in advance of the schedule that we provided. And we actually just announced a share repurchase in October to the tune of $200 million. So we're making sure that our money's working for our shareholders.
And you bought a lot of stock at 70, which is a pretty good buy.
Yeah, that's right. So the market is quite strong, and although there's some cycles, there are some really good opportunities.
Now you've got a very expanding cloud business, so you give us a read on that too.
Yeah. So if you look into the future. Clearly, hybrid cloud is the mode of the future. Mm-hmm. There'll be strength, I think, in both the physical and the virtual, but the virtual will grow a lot faster. This past quarter, our cloud business grew at 38%, nearing $1 billion. And we see that strong trend for the public cloud side continuing. So
you would have a good read on Amazon Web Services, on IBM's cloud, and on Azure, Microsoft.
Yes, we represent all 3 and then some. So we see great opportunities. And not only we, but they are investing very heavily in the business partner ecosystem moving into the future. They see great opportunity to use the business partner channel and distribution to accelerate their business.
Tech Data has always been a great acquirer of companies. You've been buying some. Is it possible that you've maxed out, or there's still some guys that you want to buy?
Look, I think when we look into the future, we're very interested in higher value technology right now. And there's always opportunities. We always have interest in engaging and looking for the right alignment with our business. And we're very disciplined in the way we think about using our cash, and we think about the the three primary paradigms, be it share repurchase, be it acquisition, or be it organic investment.
How is the balance sheet now after the $100 million debt you bought back?
Balance sheet is in great shape. Actually, our debt to equity is right where we think it should be positioned, but it puts us in a spot where we can use all three of those levers now going forward. We have quite a bit of cash on the balance sheet. As you said earlier, we're generating great cash flow, and we feel really good about the strength of our balance sheet moving forward.
See, I struggle with the price earnings multiple of 8 times, given the fact that you guys have a lot of double-digit growth, and given that you're now riding a lot of the great secular trends, less boom bust. But I guess all you can do is keep buying back stock and putting up the numbers. There's not much else, right?
Hey, we love to put up the numbers. We like to stay disciplined. We like to generate cash. We like to drive earnings growth for our shareholder. And, we would characterize ourselves as being humble but hungry.
Well, let's leave it at that, because I think that's a great way to be. Okay, that's Rich Hume, CEO of Tech Data. This stock's too cheap. I don't get it. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.